Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the journey so far over the 4-year cycle. We've been talking about the 4-year cycle ever since I started doing these videos many years ago. But there's one element I really want to address, and that is the pitfalls to avoid along this journey. So we'll have a look at the journey so far and the pitfalls that we all need to really be aware of and to avoid at all costs. I'll also have a general view of the Bitcoin market on the various time frames, as well as look at the 60-day cycle and the continued opportunity that we're getting with the Bitcoin miners. They are high risk but high reward. We've had a big pullback over the last 3 months, and for me, when there is blood on the streets in investing terms, then that's when the opportunities arise. So we'll have a look at that as well. So if that sounds interesting, without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so we're going to start off on the weekly time frame, and we're going to have a look at exactly what's happened down here. Having topped out here, what we've had is we've had a brutal bear market all the way down here. So the first leg of this reversal over here into this bull market, what you get is a participation of a much smaller number of people who are willing to take the risk and climb on board and take the risk that when it comes to down here, when most people are expecting the market to go much further down, they're willing to take the risk and climb on board. And those who did that here will have the advantage that at this point, they're carrying a big hefty profit along the way. So in the first year after a bear market, what you normally get is different people. These are the ones who are willing to take the higher risk of climbing on board when the risk was to the downside. And then some people climb on board at this point, but then they're faced with this consolidation, unfortunately, and they get frustrated here. And many times the market tries to throw them out and shake them out of the market, which a lot of people did here because they were not carrying much profits and they were on the edge, knowing that if this falls down, they're going to be in a loss again. And many of those people came back down in this market here. So at this point, some people got out one more time because just like over here, the inclination was for the market to go down. And people thought they're going to be able to get back on board at a lower price, maybe up to this level here, around about 20,000. But this is what the market does. And if you can't hold on for the long term, this is what it will do. It'll keep shaking you out and sucking you back in. So what we've got now here is an inverse head and shoulders pattern, which we went through many, many times. But once we broke above it, we've now carried on and done a stairway case rise. So we were in this range first, and then we went into this range here from 32,000 down to 25,000. So we've stair-stepped into this new range, and the market tried to shake people out in all these little moves to the downside. Look at how many doji candles there are here. And definitely there was a threat to go back down to the 20,000, all the way back down here. So those people who were shaken out at this point, unfortunately now are having to buy back at these points. And this is the danger if you don't have a strategy, especially a long-term strategy, then the market has a habit of shaking lots of people out at the wrong time. So many people have got shaken out 3 or 4 times now, and they get back in with the fear of missing out at the tops of those markets. And once again, we've now broken above that 32 range. And as I mentioned in the last few videos, when you look at the EMA ribbons on the weekly chart, as I've shown you many times, I don't want to go through old ground, but once we get above these EMA ribbons in the last 3 cycles, and we're on the 4th cycle, once we get above that, provides a safety net for the Bitcoin price not to go below any time after that. So that price is around 28,000. So we could get still a pullback down to the 28,000, but more likely, if it is going to come back down, it's going to come back to this support line of the 32 now. So the question is, where is it going to go? If you have a look over here, what we've noticed is that when the market goes up, if we are consolidating at the upper third of the rally that we've had here, that's more like a bull flag with a higher probability to go on a continuation to the upside. So this is what I would be expecting, but we'll have a look at the 60-day cycle on the daily chart to just ascertain exactly where we are, because that will determine whether we've got one more leg up or not. Before we go to the 60-day cycle, just want to show you the 4-hour time frame here. So on the 4-hour time frame, some candlestick patterns are developing, which gives us some sort of an indication of the short-term movements over the next day or two. And that is, if you have a look on here, we've got not quite a gravestone doji candle, but what we've got is a small-bodied candle with a long wick at the top, which means that prices have been rejected at the higher levels, at the 38. And we've been trying to come back here once before here and another time here. So we've had 3 goes to break above the 38, and so far we've been rejected each time. So what this semi-gravestone doji candle does, it actually puts a framework of the upper band and the lower band that more than likely, the higher probability is that we're going to be in this band for a little while it makes up its mind of which way it wants to go. Can it break quickly? Yes, of course, it can break very, very quickly just there, or it can go to the bottom side. We don't know where it's going to break, but my guess would be, if you play the probabilities game, we're coming from a low point over here into this range. So therefore, this becomes a continuation pattern to the upside. I would say 60% is going to go to the upside here. And while we've got this pattern, the last 4-hour candle gave us a very big indecision candle within this range. So once again, there's a lot of indecision within this range that's playing out. So all that's really saying is that people can't make up their mind. So we will probably, with higher probability, to be moving in this range for a while until something happens and it breaks to the upside or the downside. Okay, we're going to move on to the journey so far and the pitfalls to avoid for the next 2 years. I'm just going to start off on the monthly chart here and just give you an overall view which should benefit everyone in terms of keeping the focus of exactly where we're going without being distracted by all the noise that's out there. So once we'd topped here at the end of November 2021, what happened here was that everybody was expecting the price to go much, much higher. And instead, they carried the price to much lower levels, and all the profits people were carrying up here were being dissipated on the journey back down here, to the point where people then carried their profits all the way down to these levels at this point. And all the hard work of carrying the profits on this journey before that, what people don't realize is that the emotions people displaying at this point are the mental scars that develop along this journey. So what people have are open wounds and mental scars, which leads them into a bit of a disbelief phase over here. Once you get a little bit of a pullback and the end of the bear market, people don't believe this is happening because of what's happened in the past. And this is where this Wall Street cheat sheet tells us about the emotions that are actually experienced by those people. And that is that once we get down in this bear market, as I've just explained to you, the pain and the frustration and the irritation, the anger, the anxiety, the denial, the panic, all these emotions culminate over here where people do not believe that the market has bottomed out in this phase. So when we get out of that phase, there is this thing called the disbelief, and people miss the bottom because of the mental scars of carrying this through down here. And currently, I think we're going from the disbelief phase to the hope phase. So this is where once we got above the 31,800, the previous neckline, once we've broken this point here, people are now beginning to believe that this is no longer just a counter trend rally to the journey down here, because this is what they were expecting, to much lower levels. People like Gareth Soloway and many other YouTubers as well, they were calling for a 12,000, 7,000 and some even 3,000 Bitcoin. But they obviously were not following the charts over the last 13 years. So what really happened here was that people were underinvested. They didn't get in because they were expecting this to continue. And as I've said, once we've gone past this 32,000, and as you've seen from some of the previous charts I've shown you, the supply of Bitcoin is in short supply at the moment because people are holding on and not actually selling. At the same time, more and more people are believing that we're now in a bull market and therefore wanting to climb on board, and hence the price is hovering at the highs rather than the lows. And this is what's really fueling the Bitcoin price. And the truth of the matter is that this 2-year journey over here to the top of the market, hopefully at the end of 2025, it's a long time to be focused and disciplined, because the ultimate goal is really mainly sitting tight and focusing on this 2025 bull market top. And along the way, we're getting events which are trying to shake people out along here. And this is something we have to be worried about, because every time we have a 30-40% fall, And in the Bitcoin miners, that's exacerbated by the leverage play. So when Bitcoin has come down by about 20% in the current pullback over here, the Bitcoin miners have gone down by 60%. And the question is, how do you manage these events? Because they will determine your performance by the time we get to 2025. And I know many people in this fall have actually been shaken out of the market, because when you get to the bottom here, people think it's going to go much further, but that's when it turns around to go much higher. And then you're having to buy back at higher levels and you lose your positions. And the problem is just one mistake and you could lose a big portion of your position size. And what I want to warn people is that if you make one mistake along this way, there is the possibility of losing a big portion of your position size. And one of the concerns I do have is that while we're all thinking that this is where the top is going to be, we have to consider that this time around in the 4-year cycle, we may well have a left translated cycle rather than a right translated cycle. So if I put the midpoint of this current 4-year cycle, and this is the end of the 4-year cycle, remember this is the 3rd year, the top will be the 3rd year. So we're going from bottom to bottom. And so far from this bottom here, we're only 1 year in here. This will be our 2nd year, the midpoint, and then the 3rd year is up here, and the 4th year is the downturn that we get for the next bottom. So what we're doing is we're counting from bottom to bottom as a 4-year cycle. So by the left translated cycle, I'm saying that before the end of 2024, that'll be the midpoint. We could quite easily run our way up here, going above the previous 69, maybe to 90, 100, 110, whatever it's going to be over here, catching everybody by surprise, and then having a period of 2 years into this downtrend for the end of the 4-year cycle. So this is something that we must really be aware of. Everything has to be on the table. We mustn't get stubborn. We mustn't think that everything that's going to happen over the next 2 years is going to follow the same as the previous 3 cycles. We should use them as a guide, but keep all our options on the table. Always remember, as I keep saying, to remain neutral and fluid and flexible. And this is why I don't listen to a lot of the noise. And the thing to really look out for, this is absolutely a key point. So please always keep this in your mind for the next 2 years, or make a note of it. It's an absolutely critical thing, because some people will ask, how do we know this is going to be a left translated cycle? In my opinion and in my experience, if we make a new high, and remember in the many videos I've done, this red line here is telling us that over the last 3 cycles, we're in the 4th cycle now, it's after the halving that we make a new all-time high. This is what's happened in the past. If you look at the previous cycles, this was the previous top here, and after the halving over here, we made the new all-time high. And the same thing happened in the previous 2 cycles. So the sign to look out for is that if we happen to make a new all-time high around the halving stage, either before or just after, that is the red flag that we're going to have a left translated cycle. So we should be aware that this market may well be topping off very, very soon once we pass this, either before the halving or just after the halving, because we're not due to actually top out until around October next year. So if we make an all-time high anywhere around here, this is more likely to happen for the next 2 years, and that would be a left translated cycle. And if we put on the pi cycle, this is one of our main indicators that will give us the signal that the top has actually been reached. We should know that when the green line comes up and crosses the red line, that will be our cycle top. And if this moves up very quickly, this green line is going to move up very quickly as well. So no matter what, the green line should come up either to cross the red line or very close to it. And that will be our red flag that this market is about to top off. And the reason why I say that it might come close is that in the previous cycles, as one of our members here noted, that the meeting of these 2 lines is getting narrower and narrower over the last few cycles. So if we put the rest of the cycle lines on here, as you can see, the previous top, when the green line came, it didn't really quite cross the red line. It just skimmed it and then came back out. And this one may not just touch it at all. So we've got to just keep that open as well. But the main thing is to note if the price comes and tops out much before where it's expected to. So you know that we're going to have a different type of cycle. So if we're going to have a cycle which is similar to the previous cycles, i.e. a right translated cycle, then I would expect a big shakeout at this point here, at around the 53,000, which is where the pi cycle is at the moment, where we're expecting a pullback. If we don't get a big pullback here and the price continues to the higher side, then we know this is going to be a left translated cycle, and we should then be aware that this could top out at any time, and use the other indicators as well for confluence to get out. And this is where I just want to warn everyone here just to be aware of this, and that is that you may well hear stories, and because I've been in this space for over 6 years, you will start to hear stories of people making millions and millions from altcoins and NFTs and leverage trading, etc. And I can assure you, while a few will make a lot of money, and I'm talking about 1%, 2% of the people, the majority will be trapped by these people who will show you shiny new things where people can make a lot of money, because the euphoria will suck people in at the high prices and chew them out at lower prices. And that's a rinse and repeat formula that's been happening for the last 250 years in the stock markets. And I can tell you, I have zero interest in altcoins, NFTs, leverage trading, etc., etc. My only concern and my only focus for the next 2 years is just the Bitcoin miners. And all I would say is that everyone has a decision to make, and I can only bring from my own experience of being distracted by other things going around you. And certainly I'm resisting the urge to be distracted by anything else that's out there in the market. And beware of the YouTubers who are saying to you that they are making millions through leverage trading and altcoins and NFTs. And you'll see some of these videos, the top 3 altcoins to make you millions, the top 5 altcoins to make you billions, all that kind of thing. Those are designed to bring new people to buy those types of things, and then they can get out at the top. That's what's called rug pulling in this industry. And don't be scammed by that. And all I can say to you is, obviously I can't provide financial advice. Everybody's got to make up their own decision. And I can only give you what my strategy is, that the long-term strategy that we have here will produce much better results with less stress and less anxiety, and with better outcomes over the next 2 years. A quick look at the 60-day cycle. Currently we're on day 42. From this last low to the current candle, we're at 42 bars now. So what we've really done so far is that we made a high over here before the midpoint. So far this 60-day cycle is actually running on a left translated cycle. And I would expect, having failed 2 cycles down here, we should see with a greater probability for this to be a right translated cycle. So that gives us a clue that we may have another leg up to the upside in order to create that right translated cycle. And the next stage, or the next resistance point, is this here at about 40, 41, 42. And if we use the RSI MTF, as I said before, as this goes up, this starts coming down. So currently it's right at the bottom of that range at around about 40,800. And if you watch the Monday's video, you'll know that this was over 41. So we're just making a stair-step fall as this is going up. So it looks like to me it's going to be around about 39.40 where we meet this. And we can expect at that point for a 60-day cycle pullback. Wherever that goes to, I would hazard a guess now that we're getting so much more deeper into this cycle here. We're on day 42. We've got 18 days for the end of the cycle approximately. I would think that with the amount of demand there is in the market and the supply being short and getting shorter, the probability is that we're going to come back to one of these levels here around about the $35,000 mark. So let's see what happens, but this is how I see things here. A higher probability to move up, to create the right translated cycle, to meet the RSI MTF line, and a pullback that would make sense into the 60-day cycle low at any point around here. And off we go to the next cycle. And this is gets very interesting, because this is where I would expect a big major pullback from. And that is the pi cycle. Currently now, this is really moving forward, and that's at 53,000. So it's gone from 50,000 in just a couple of weeks to 53,000. And as I've shown you many times in my previous videos, before the halving, the price has hit this red line every single time before the halving. That's happened 3 times before. We're up to the 4th halving coming up in April. So 3 out of 3 it's hit this line. Will it hit the 4th time? Well, it's anybody's guess. I'm only looking at the charts, and until I see otherwise, there is a higher probability in my mind that it's going to hit this red line here, somewhere between now and the halving. So the question a lot of people do ask me is that, based on my long-term portfolio, would I be selling here at the RSI MTF line, or would I be selling at the red line on the pi cycle? So what they're really asking is, do I sell in anticipation of the price coming up to those points. Generally speaking, on a long-term 4-year portfolio like I've got here, which is obviously with the Bitcoin miners, as I've mentioned many times, it's not with Bitcoin. Normally a 4-year cycle portfolio, you would not sell. That's part of the 4-year cycle portfolio rules that I follow. However, as I've shared with my private members, I've been accumulating in my long-term portfolio using a method called the ratios method. So what I've done is actually swapped one Bitcoin miner with the other when the ratio between the two gives me an advantage to do that. And I've been doing that since April this year. I presented it to the private Bitcoin miners club that we run here at Wisdom Bytes. It's a method that you can really accumulate without taking any risk hardly at all. So I've done that about 4 times in the past, and currently I'm in the middle of accumulating one more time using that same method with the same 2 Bitcoin miners. And so far I've done 50% of it, and I'm waiting for the next target to actually swap. So what are the results with that? So far, since April, I've increased my long-term portfolio by just over 60 to 65%. And I'm hoping to do that for the next 2 years. So what I do is with my long-term portfolio, I take a very cautious approach. Only when the ratios opportunity comes along, which is on average so far since April, it's occurred about every 2 months on average. So every 2 months, on average, it gives me an opportunity to swap one Bitcoin miner with another, and that allows me to increase my holdings. And the reason why there is very little risk is that you're not holding the cash once you sell. You're basically selling one and immediately buying the other. And you only do that when the ratio allows you the advantage to do that. Otherwise, you just continue to hold. So if I show you this example here, if you've been watching my videos, you'll know that I got in exactly at this point here with 75% of my funds, and the rest of the 25% were right at this point here. So just using those indicators that I showed you last year around October and November, I went through many videos telling people that we're coming to the bottom of this market. If you want to go and check those videos, if you look at any of those videos around about the November time when the market was bottoming out, I did a series of videos, probably about 7 or 8 or 9, even more maybe, and going through all the indicators that were telling us that we're coming to the bottom of the market. So my idea, my strategy was really for having a long-term portfolio of 90% and basically doing absolutely nothing, taking away the risk, taking away the stress and the anxiety, and just basically riding all these movements all the way up to the end of the 2025 bull market. That was my original strategy. And with the other 10%, I was going to use that as swing trades just by using the support and resistance and various other indicators to try and get in on the 60-day cycle. And the first 2 rounds of the swing trades in the Bitcoin miners that I went through, we made very good hefty profits. And this is where the cycles are really useful. Once you've got the bottom of the cycle, you can really ride it with the Bitcoin miners because they're a leverage play. So when the Bitcoin does go up by 10, 15, 20%, they do go up by 60, 70, 80%. Although the current situation is reversed at the moment, but I think that's only temporary. But the last 2 cycles, we got caught out and we got stopped out. So the 3rd round wasn't very successful. So 1st round and 2nd round were very successful, and I'll show you the figures in a minute. We're now on our 4th round, and so far we're doing reasonably well from here, and we're riding some of the profits with the Bitcoin miners up. So really, it was a very simple strategy to try and get in. Very key was to get in at as near the bottom of the market as possible. And that was with the Bitcoin miners. And then to ride it up all the way to the end of the market and say, thank you very much indeed, and get out. By using the various indicators, which I mentioned in just a few videos ago, which tells us where the top of this market is more than likely to be. Nobody can guarantee that, but it's better to have some indicators that give you some guidance. So in essence, my long-term strategy has been 90% has been for the long term, and just using the long-term positions and using that method, as I mentioned before, the ratios method. And that ratios method so far has actually increased portfolio around 65%. Then the 10% of the portfolio was going to be just for the swing trades. And the profits from these swing trades over here go back and actually add to the 90%. So this 90% gets bigger, first by using the ratios method, and secondly by doing as well as we can on the swing trades here. And the main reason behind that is that once you made a good profit, you really don't want to be risking it. And because the 90% is the one that I don't really risk very much at all, then by putting the profits into there allows me to grow this so that by the time we get to this point here, this becomes a very big amount. So we'll see how that happens. If we have a look at the round 1 and round 2 results, we can see that in the round 1 swing trades, that was in March 2023, we entered into 7 trades here. And as you can see, sometimes we do them multiple times where we made some profits and it reaches a certain target. When it pulls back, we go back in again. And that allows us to get repeated profits during that swing trade. So on the first round, we made 37, 22, 52, 42% here, got stopped out on one of them and made a further 39 and 21%. And that was simply by using the 60-day cycles to get the bottom of the cycle and then to ride the Bitcoin miners. With the second round of the swing trades, that was back in July, and this time we only went into 4 particular miners here: Marathon, Cypher, Stronghold and Bit Digital. So we can see we did quite well here one more time: 56%, 85%, 86% and 0%. So you're always going to get the odd one that's not going to work out. And as I said, with the third round, we got stopped out twice. So that limited our losses there. And these are the round 4 swing trades, which were started on 18th of October. So approximately 5 weeks ago. And so far, we've managed 7.5%, 33%, a minus 5%, and currently we've got 2 live trades going on at the moment. So of the 2, this one's doing really well. We got in on this one a bit earlier, but we've only just got into this one here, which is showing a little bit of a loss. But I have very high expectations of this one. I'm hoping for around about between 40 to 50% to the next resistance point. And like I said, all the profits from here go into the long-term portfolio in order to protect them with the cautious approach. So basically that's a very simple strategy which I followed in the last cycle, which allowed me to be very successful, and I shared that strategy with the Bitcoin Private Members Club that we have here. And the reason why I take a cautious approach like that is because we're dealing with a very highly volatile space with the Bitcoin miners. So while Bitcoin itself is incredibly volatile, and some would say very risky, the Bitcoin miners, being a leverage play on the Bitcoin price, they're far more volatile than even Bitcoin. So for those people who do not like being in a volatile environment, then the Bitcoin Miners Club is not for you. So you should keep completely out of it. For those people who want to have that as an option maybe, and want to look at some of the opportunities that I go through with the Bitcoin Miners Club there, if you're interested and you're curious enough to find out exactly what we do with the long-term portfolio as well as with the swing trades, we do a lot of technical analysis on all the Bitcoin miners as well as Bitcoin, looking at the 60-day cycles and looking for opportunities to ride those cycles. And if you're interested in anything like that, then all you have to do is click the join button here, and for the price of a coffee per week, that gives you access to everything that we've done in the past and the current state of play with the long-term strategy as well as the swing trades. And because this is a growing community, I only have 12 more spaces left. I think anything more than that, I'll struggle to actually continue with the service. So I think the best thing is to limit it to a certain number and then to continue providing the updates on a daily basis as well as the videos, as well as trying to find the opportunities with the swing trades and the long-term portfolio. Just to remind you, there's no markets today because in the USA there's the Thanksgiving Day and tomorrow it's only half day. So the markets are closed today and only half day tomorrow. So it'll be back to normal on Monday. So for the large numbers of subscribers I've got from the USA, have a wonderful Thanksgiving Day, and for the rest of us we can just enjoy the day off. Hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.